Good evening, everyone.
Good evening.
And good to be here again. And thank you, Nikhil, for the opportunity. And it's a pleasure to be with my panel as well. I think, the opportunity to speak about the big picture. My favorite quote about the big picture is a very famous individual called Stanley Druckenmiller, who was George Soros's trading partner and still is. And he said, as a macro investor, my job for 30 years was to anticipate changes in the economic trends that were not expected by others and therefore not yet reflected in securities prices. And I think that's the best explanation of what I'm trying to do for the next 20-25 minutes. The first thing to say is geopolitical friction remains sky high. I saw some statistics that came out today by an organization called Vision of Humanity, which said the number of displaced persons in the world today is about 60 million. It's the most since the Second World War. The number of terrorist incidents is the highest since they began their records. So if you look around the world today, you see a lot of conflict. You see Russia and the US and China and the South China Sea. And I think when you think of a world, it feels to me very, very fragile and on a hair trigger at that sort of geopolitical level. I don't think he's going to win. But and I think Hillary Clinton has really surged this week. But I still think that, he is a wild card, Donald Trump. You just have to follow him on Twitter to realize how wild he is. And I do think that if Trump comes in, it's going to make a significant impact to the way the US interfaces with the world. I think his best opportunity is if there is, unfortunately, a terrorist type attack in the few days before the election. And then I think all bets are off, and I think he has his best opportunity to come in. I'll take questions on that later. The commodity markets have been where all the action has been in the markets in the last 12 months. And I just wanted to show you this 12-year commodity chart, taking every commodity into the mix. And you can see that in 2008, we had this huge surge. We then had the collapse of Lehman. And today, the commodity prices have bounced. You can see that little turn higher, but we're still so far below where we were previously. And therefore, when economies, particularly the commodity-based economies, Nigeria, Angola, and I'm going to come to all of these, you just have to look at that graph to understand where they are today in comparison to where they were. They're not in a good place. And it depends so much now on how they react to the situation as to how they move forward. However, this is a chart taking you back from January, and the classic calculation of a bull market is a 20% move from the low, and we've had a 20% rebound in the commodity index. And that, I think we did this chart, Sammy will tell me, on Wednesday, and it did 20%, and it's back to sinking again Thursday and Friday. So it's a very interesting situation from a market perspective. A lot of people were hoping that for the rebound to last. I'm not so convinced. As we come closer, these are the two very famous Economist front pages that I think everyone has seen and people roll out whenever people speak. One was Africa Rising. The other was The Hopeless Continent. The Hopeless Continent was from about 2002. Africa Rising was 2014. The question is, are we? Does it feel like we're rising? Or have a lot of things changed? In 2014, I attended a conference in Maputo, in Mozambique, with the IMF. Madame Lagarde was there. Mozambique was the poster child of Africa. It was called Africa Rising, and it was really fating the Mozambique story. Everyone was excited about what was happening. Tremendous gas finds, probably as big as Qatar. That was 2014. This is the bond price of the Mozambique 2023 bond. The price now is below 76, which is the lowest price sovereign bond other than Venezuela. That is 2 years. From hero to zero. So the point I'm making is how much the landscape has changed. Errors are being punished. The clearest evidence is in that bond price. We had a whole Eurobond saga. The bond price never moved like this. I'll show you how much it moved. I think some of the big political trends that are happening, one is people power, or I call it sometimes the fight for the street. And we know we have a fight for the street here as well. But I think if you look across the continent, we are all more powerful than we ever were before. Of course, it plays out differently in different places. But I would say in 2014, what happened in Ouagadougou, the termination of beautiful Blaise Compaoré, was a signal that I think governments in sub-Saharan Africa need to hear. That there is a street, it is more powerful. How it mobilizes is going to be different in different countries. We're dealing with a street mobilization in itself at the moment. Terrorism. If you look at this chart, you'll see that the most dangerous part of the world is Middle East, North Africa, and Sub-Saharan Africa. You would have thought we would be not as dangerous as the Middle East and North Africa, but we're pretty close. And this remains a challenge for all of us, and especially here, where we had those, and we've had a few very mean and nasty attacks. This chart that I'm showing you here with Nigeria at over $500 billion of GDP. Do you remember about a year and a half ago, Nigeria was the biggest economy. It was rebased. Everybody got really excited. Now, if you applied the unofficial Nigeria Naira FX rate to that GDP number, you would be nearly halving it today. That's pretty dramatic. Similarly, with South Africa, they've got a free-floating rand, so that is a correct number, pretty much. But you can see that there's been a dramatic movement in the size of people's economies because of the FX movements. And the most glaring one is obviously Nigeria. I hadn't had the data when I put this out, but just to make 2 points. The pillars of sub-Saharan African growth, typically Nigeria, South Africa. They make up, well, 2 years ago, they made up 50% of sub-Saharan African GDP. So whenever you see forecasts of what sub-Saharan Africa is going to do, half of it is what these two countries are going to do. First quarter, Nigeria contracted. It went negative. First quarter, South Africa contracted. They have both gone negative. Just think about when we last went negative. These are the biggest, two big elephants in the room are contracting. And I agree with this comment, which I thought I'd just share with you quickly, is we're in the part of the cycle when the economies slow down. This is a US fund manager speaking about the global economy. And administrations have to take tough measures. Situations like that require being more on the ground to be there to understand what's happening. And I think that's really the case with us as well. And this is just talking about, fund managers. What are they doing? They're saying dramatic shift. Firms now have analysts learn the names of politicians, prosecutors, Supreme Court justices, double the number of trips, scan prices at foreign supermarkets, track footprints at stores, read facial expressions of policymakers. Global fragility, they say, is unveiling institutional weakness, poor governance, low labor productivity, and the need to track them all. And actually that applies here as well. Poor corporate governance has destroyed shareholder wealth at the stock exchange. Good corporate governance has created shareholder wealth. If you look at the companies this year that are performing well, Safaricom, East African breweries, they're up 10% this year. The stock market is flat. Uchumi, down 70%. Now, I don't know who to blame there, but I blame a lack of corporate governance, and it has destroyed people's money. And you see that in many different instances. National Bank, down 27%. Just going back to Nigeria before I start coming down, I think Nigeria is possibly hurtling towards a very disruption. What do I mean? I think he's a brilliant president. I think he's doing what we'd all like to see, particularly on corruption, where he's had a lot of success. But he reminds me, President Buhari, of a man who walks into the casino out there. He pulls out a huge amount of money, and there's a roulette wheel where there are 36 numbers plus 0, and he bets it all on one number. Because the FX policy in Nigeria is the equivalent of that bet. And in all my working career, and funnily enough, in 1992, I reached the trading floor at Credit Suisse First Boston. And within a week, I watched George Soros and Stanley Druckenmiller, who was the first person that I showed you, take £1 billion from the Bank of England. Why? Because the Bank of England had an artificially high exchange rate. And Soros and Druckenmiller saw that. And what did they do? They kept selling the pound. How much do you want? $1 billion? Have $1 billion. You want another billion? Have another billion. Because they realized the Bank of England couldn't keep it up. How on earth is the Central Bank of Nigeria, whose reserves we don't even know how much they are, how can they continue this policy? They can't. They can only continue it if it becomes a Venezuela policy. You have multiple tiers. Oh, you can have the exchange rate at 220. You can have it at 240. You can have it at 197. It's a recipe for a disaster. And I don't think any policymaker in Nigeria is strong enough to stand up to the president and say, I'm sorry, but this is a terrible mistake. The Nigerian markets, the forwards are already pricing in a huge devaluation, and that's why we're negative. And what I mean by disruption is that it's going to get more negative. That economy, in my view, is going to contract 5% this year. The second biggest economy in Africa, South Africa. And you know the phrase Zupta economics and all of that. The currency, this was, one day I walked into the office, I get to the office at 7 in the morning, I looked at my screen, I looked at it again 30 minutes later, the rand had fallen 10%. And it happened in about 15 minutes. That is a move of the shilling from 100 to 110 in the space of 30 minutes. The shilling moves 50 cents. And everybody's going, the shilling is softened, the shilling is falling. If that happened here, can you imagine what the headlines would be? And that is a consequence of poor policy making. And that's what I mean by saying that in this current environment, you get punished for making mistakes. In 2014, when Africa was rising and everybody was excited, you weren't really punished. You could make a few mistakes. And then just to show you one chart when I'm comparing, this is the devaluation. The top one is the Angolan Kwanza. Next is the South African Rand. Next is the Naira, because they haven't devalued it. It would be up there once they devalue it. And look at that. That's our Kenya shilling. I call it the Teflon shilling, because actually, the shilling is a strong currency. The shilling is convertible. You can walk in and get a quote on a 50-cent bid offer spread. Now, go and tell me where else you can get that done right now on the continent. Another example, sorry, just to show you what a real devaluation means. This is the rand. In this space, since 2011, the rand has gone from 6 to the dollar to 16. That's big. The shilling, we've had a couple of spikes. We had one in 2011, do you remember, when inflation surged and we didn't raise interest rates quickly enough. We had an increase in October, a trial by fire for the new central bank governor. He came in, he raised interest rates. Today, the shilling strength is also a consequence of how the markets feel about Patrick Njoroge. They have a very high regard for him. And that is giving the shilling strength as well. Just wanted to touch on a couple of other Eurobonds. Have a look at this Zambia Eurobond, 106, 107. When they first sold the Eurobond, it was 16 times oversubscribed. People were willing to give them 16 times more money than they were asking for. Today, it'd be tough to sell a Eurobond in Zambia. Just a point, I think, just a big macro point is that I think we're going to see a resurgence in what I would call the Indian Ocean economy. There are 3 billion people living in that economy. It's a massive economy. And I think we're now starting to see it gain traction. We're going to start to see it really motor. So when people tell me, what is the market? This is a 3 billion addressable market on our doorstep. Touch quickly on the El Nino. We got very lucky. Yesterday, Sami was saying how when the agricultural economy does well, the whole economy does well. It's a fact. We were strong last year at 5.5, 5.6%. A lot of that was because of strength in agriculture, because we lucked out with the El Nino phenomenon. If you look at the top 10 fastest growing economies in Africa today, Ethiopia, pretty much on our doorstep. DR Congo, not that far away. A few challenges right now. Cote d'Ivoire, very strong. Mozambique, that number's outdated. It's not going to make that. Then you look, Kenya, Tanzania, Rwanda. The point is that in this sort of picture I painted, which was of a darkening sub-Saharan African sky, East Africa is a bright spot. A lot of it has got to do with the fact that we are oil takers and the oil price has gone down so dramatically, like I showed you before. But there are other things happening as well. And if you look at GDP forecasts, you've got contraction in South Africa, you've got contraction in Nigeria. Kenya is estimated at 6% this year, Tanzania 6.9%, Uganda 5.3%. Ethiopia, we don't know how bad the drought was, but it's an economy that's on the move as well. The big elephant in the room for us, and I think every Monday I look out my window and think, is the election next week? Or is it soon? And then I remember it's still a year to go. And unfortunately, we've not handled our elections well. This is a fact. And it is proven in how the economy reacts. And as you can see, 92, 97, 202 we were okay. And we had one of our biggest expansions, 202 to 207. 207, we crashed and burned. Last election, we did okay. It has a very, very big effect. And how we handle it this time will be key to how we come out on the other side. In fact, election years, the average growth rate is 2.7%. Non-election years is 4%. It's 1.3%. I've got to put it out there. I really hope that calmer heads prevail and we take the level of contestation down several notches. There's been a huge change in the current account deficit, primarily because our biggest expense item is oil. Oil prices at $100 versus $50 makes a big difference. That's why also the shilling has been strong, because we're not having to find so much hard currency every month to import the fuel that we've been importing. I estimated the saving for us as a country is about $1 billion to $1.2 billion per year. And that has also strengthened the shilling, because because we don't have to go and find that kind of money at the moment. As I said, the Kenya shilling has been stable, and I think it is an important signal in the noise that there is a lot of strength in our economy. People feel confident about it. Let me just touch on the Kenya Eurobond, just to give you an idea. On the left-hand side is those when they were sold. They went to a premium, you remember, the prices rose. The cabinet secretary tapped the issue. He sold more because the price had risen. So it was a very clever trade because he was selling it, for example, at 106. And when he comes to redeem it, he's only got to pay 100. So it was a clever trade. Of course, in other places of the world, we have an extraordinary situation in the bond markets. For example, in Japan, which is debt to GDP, is 240%, by the way. But today, they are paying negative interest rates on the entire bond curve out to 20 years. If you give money to Japan for 20 years, you're not going to get a coupon, and you're going to get less money than your principal at the end of that time. Get your head around that. Places like Sweden, which also has negative rates, your mortgage rate is negative. They're paying you to have a mortgage. We could do with some of that here, I'm sure. Of course. The point, just quickly to touch on this Eurobond, of course, in January it peaked in terms of yield. That figure on the right-hand column is the yield. It got as high as about 9.31%. That was coincident with all the arguments about the Eurobond. Subsequently, it has rallied very sharply. Just to touch on the points that Nikhil, finish off with what Nikhil was talking about, the SGR. Obviously, there's a political imperative to make it operational before the election. I have a vision of President Kenyatta sitting with his train cap and going and driving the train. And I think that's how he'll be saying, like, I did it. And I think that's going to be a pretty key. I think President Magufuli, I have to say it, I'm a Kenyan and I'm in a room with Kenyans. He's a formidable adversary and he's winning. For us to have lost that pipeline deal, it's not a small potato, right? And to have lost it by so much. The data that's coming out is saying we were priced that oil pipeline at $17 a barrel, plus. The deal that he put on the table was $12 a barrel. Now the question you have to ask yourself, in trading, if I'm missing by that much, I'm not even in the game. I remember I'd always call back, how much did I miss by? I mean, you're not calling back on this trade. So I do think we should not underestimate how quickly and how cleverly he's moving. We are the gateway to this region, but we won't be if this continues. Lapset, I'm afraid, does not happen. Why? Lapset was predicated on a number of things. It was not predicated on Turkana oil. It was predicated on uplifting Ugandan oil. It was predicated on sending oil up to Ethiopia. It was predicated on a whole lot of things. Currently, Lapset is predicated on Turkana and South Sudan. South Sudan owes $4 billion. Where are they going to find the money to participate in this? They're not. So my issue with this is, and I think, Nikhil, you said as much, that there was a much smaller allocation to Lapset. Well, we know why. Just quickly finishing off, Kenya's 2015 GDP growth rates. We saw a lot of strength in agriculture, 11.6 in Q4. Mining and quarrying started to gain momentum back end of last year. Construction, a lot of that was SGR. And of course, ICT, which is off the side, has been strong now for a decade. Again, talking about electricity, you can't power or industrialize without electricity. We have actually, incredibly, a surplus on the grid at peak hours. This is the only country I can think of south of the Sahara that has this situation. However, the problem is our transmission. That's why we're consistently having breakdowns. But we don't have a shortage of electricity. We have an issue with actually transmitting it. It's quite old, the transmission networks. And I think, if we really want to create jobs, which we have to do, which is 1 million jobs or whatever number we care to pluck out, we can see, it requires cheap power and cheap transport. Those two ingredients are going to be there. This was a Mindspeak session we did with the central bank governor, talking about banking. Look, there's a new sheriff in town. That's clear. Things have changed. And whether it's spelt out or not, I think what we're going to see is market-led consolidation. Fewer banks and stronger ones. This is a fact. And whether it comes in the budget or it doesn't is irrelevant. It's going to happen because you've already seen a big deposit flight. The interbank market's not working in Kenya. The interbank rates are 2.5%, the lowest for 4 years. Why? It's because the big banks are not lending to the little ones anymore. They don't want that risk. They stopped doing that a few months ago, right? They just didn't announce it. So you've got a situation now where the tier 3 banks have lost deposits. People have removed their money. Capital was very little. They resisted capital increases. And now there are issues around the accounts that they're presenting. So I have to be a little bit harsh and say, whatever way I care to look at it, these are now zombie banks. They're not able to lend money out because their whole structure has been destabilized. Unless you shovel in a lot more capital, you don't have a model that can work if you're down with if you're in one of those small banks. The Uberization, I think, what is very noticeable is that we have this extraordinary economy where we have things happening. I call it I think Joshua was the guy, Joshua Oigara actually, who's called it the Uberization of Kenya's economy. And then I was interviewing a partner at Deloitte whose tag word was, what was it? Uber yourself before you get Kodaked. Right? Because Kodak, of course, went from... So there is a huge, very interesting thing happening in our economy, in the new economy. For example, let me give you an example. KCB today has at the time of the full year results, $92 million loan book in the space of 12 months, where they don't see you. They do an algorithm on your phone. And they'll tell you whether they want to make you a loan or not. And it's very interesting. What I discovered was if you organize your phone alphabetically, you are a 9 times better payer than somebody who doesn't. So they're doing all kinds of new things to analyze your credit worthiness. It's quite interesting. But the point I'm saying, that's from a standing start to $92 million. Uber, single biggest taxi service in Kenya. In how many months? 4 months? Of course, I could not touch the sports pesa. It's massive. It's grown exponentially. I saw some statistics. SMS, everyone used to say, SMS is dead. I remember last year, all the journalists saying, Bob, SMS is dead. You're going to be done by WhatsApp, right? SMS had double-digit growth for Safaricom, all to do with sports pesa, right? So huge impact in a big corporation's bottom line from this point. Of course, the issues around how we're dealing with it as a society, but the point is it's there, it's growing really quick. It's one of the fastest growing components. So let me finish off by saying we're on the up. We have, in my view, a component of macroeconomic stability. We don't do these big curve balls that you might find in other countries. And I think we're in a much, much better place than many other countries at this moment on the continent. Thank you.